Hi aspirants, in this video we shall discuss about whether India's digital rupee could replace US's dominance in the SWIFT network. So what is the SWIFT network? We have already uploaded a video on it. Those who have any doubts about SWIFT network can just watch that video. Now getting back to the digital rupee, or called as central bank digital currency, simply CBDC. We all know the present government in this budget announced CBDC is going to be legal. That is, the digital currency is going to be legal. Now, first, let us see how it's going to affect the common people, you and me. And also know that digital currency being made legal, it's not just in India, it's already being done and happening. For example, the digital dollar, the digital yuan for China. Now, first of all, what is money? We know we call our currency as a fiat currency. So what is that? If I give 100 rupees to you, I just give a paper. So what does that mean? It is a promise. It is just a promise, because that money, that currency that I give you, that cash note paper that I give you, it does not have any backing like gold or silver or anything. It is just a promise. It is just a signature, the RBI governor's signature that says this paper is valid for the value of rupees 100. It's just a promise, that's it. Now, a CBDC is also a currency note issued by the same central bank, but simply in the digital form. It's not a paper, but digital form, that's it. Now, the question is, can you give a CBDC and exchange it for normal currency? Yes, very well. You can give a digital currency of 100 rupees and get a paper currency of 100 rupees, yes. So now, what is the difference between CBDC and the UPA that we are already using, like the GPay, Paytm, all these things? The difference is, for the consumers, for you and me, it looks very similar, no much difference at all. But for the bank, from the banker's point of view, it's completely different. Now, if I pay using GPay, my GPay is connected to my bank account. Now, from my bank account, the money has to be debited and it has to be credited to the shopkeeper's account. But in reality, what happens is, only in the ledger, the entry happens. Like the shopkeeper receives the message, your account has received 100 rupees. In the bank account of the shopkeeper, 100 rupee is credited. Yes, it happens only in the ledger, but the actual transaction takes place not at that moment, but after some time. And this will be the net transaction. So we'll see what is net transaction. Let us say there are two banks. State Bank of India is there, Canara Bank is there. Now, many people who hold State Bank's account, they send money. Let us say at the end of the day, they have sent 100 crores. So some people from Canara Bank, those who hold account on Canara Bank, they send money to State Bank of India. Let us say that amounts to 50 crores. So here actually the transaction does not happen 100 crore from State Bank and 50 crore from Canara Bank to State Bank. Instead, the 100 crores that has to go from State Bank to Canara Bank and the 50 crore that has to come from Canara Bank to State Bank, both are made into a net value. Simply only 50 crores have to go from State Bank to Canara Bank now. That transaction alone is done. And sometimes it takes almost a week for this to happen. So the transaction actually does not happen immediately in the case of UPI. But in the case of a normal paper currency, what has happened? You just give the money to that person. That's all. Transaction is done at that instant. It's done. So CBDC, it's exactly the same, because CBDC is nothing different from a paper currency. The transaction happens immediately. Now, this digital rupee is of two types. One is the wholesale CBDC and the other one is the retail CBDC. Wholesale CBD is for the banks and the retail CBDC is for retail users like us, you and me. Now, before getting into the details, let us see what is so important about that CBDC. So why do we at all need it? It's going good and fine. We have paper currency and now we are calling for UPI, and we know India has the largest transactions with UPI. Everything is fine. And why do we need CBDC? So what is so special about it? Now for that, let us see the applications. The first application. Now the CBDC can work with something called as a smart contract. So what is a smart contract? In just one line, it is a self-executing contract with certain agreements in it. Some parameters and agreements will be in it. So rather than explaining it, let us see an example which makes it more easier. Now, refugee crisis is a huge problem for the entire world, particularly for the European Union countries. But one country has gone through this, managed this very efficiently, and that country is Finland. So how did they do this? The big problem for refugees is once they get into a particular country, once they immigrant into that country, they don't have any cash in their hand, they don't have any financial support for them. Now, once all the documentation, verification, every trouble they go through is over and they get into the country, their problem is they don't get any loan to start a business or whatsoever because they don't have any financial history in that country. So how will any bank give loan to them? So that is the problem. So what this Finland did was it gave some smart card to them with prepaid amount in it. So how did they do this? So this card will be used for all sorts of transaction by those refugees to buy anything, to have a credit score, everything. So for a refugee, it's very difficult, the life is very difficult. So what happens is some subsidies are given for them, but every agreement is within this self-contract, as we said now, within this smart contract. Here, for example, let us say, for the first 1 year, there will be like 30% subsidies for groceries, 10% subsidies for fuel, something like that. And when it goes to the second year, the subsidies for groceries will go to 20% and the subsidies for fuel will go to 5%, something like that. And if that person gets a job and he earns some particular amount, let us say some £5,000, if your earnings go to £5,000, you don't get any more subsidies. So all these things happen just with that smart card. They can spend with that smart card and all these details are already there. If they get a job, their salary is going to get again credited back to that same smart card. So every agreement is self-made there. After they attain that salary, after that particular point of time, their subsidy is done. And at the same time, based on their transactions, based on the salary, based on what they buy, based on the small loans that they get and repay, all these things, their credit score is also stored within that smart card. And now that smart card acts as a proof for them to get a loan, a financial history for them to get a loan. They can even start a business, run a business and get profit from that, and that is going to get back to the country. It's going to make the country more prosperous. You can see this country, Finland, has changed their trouble into their profit. Now this country is going to get profited by the same refugees starting business, making money, and that money goes to the country now. So all this was done simply with this smart contract or the digital currency. Now the second application, financial inclusion will increase to a great extent. We know for the past 6 or 7 years, India's struggling a lot and also has achieved a lot in financial inclusion. The target of India right now is every single citizen of this country will have a bank account. But this is not very easy. There are still people without bank account. Now, how is this solved? Again, we'll take an example. We're going to take example the Bahamas. Bahamas is made of like on an average like 300 different or more islands together. So if you have to go to a bank, you have to take a boat and travel for hundreds of kilometers. So this is not very easy. This is not very possible. So what they did, they introduced something called as a digital currency. Their digital currency is called as sand dollar. So this might be a prelims question as well. Their digital currency is sand dollar. Now here, this digital currency or the CBDC does not need a bank account. Those people with no bank account, those having a mobile phone can do transactions. This is what happened here in Bahamas. So it almost included everyone with a bank account just with the sand dollar. A country like India where many people do not have a bank account, but almost everyone have a cell phone nowadays. So CBDC is going to increase financial inclusion to a great extent. So in the case of our digital rupee, all that is needed is a Aadhaar number and a smartphone for doing transactions. And now this helps RBI track cash and also help with credit availability to these people. Same thing that happened in Finland. So people using digital currencies, what happens? RBI is able to track their money, and also at the same time they can have this credit score which helps them to get loan from the mainstream financial institutions like the bank, so they don't have to go to third party loans. And something very important here is digital rupee transactions can be offline. No network is needed. The phone can be offline to do digital transactions. And the third important application is remittances. So we know India is the country which gets the largest remittances. So when a person working in another country sends his money back to India, the biggest problem is the exchange. So now we use third-party exchanges, for example, Western Union, and they charge 2 to 3% of that money for service. And moreover, sometimes it takes 3 to 5 days for the money to reach here. And this might sound very simple, just 2 to 3%, but it is for common people. But when you talk about a business, when 100 crore or a 200 crore transaction is happening, when 100 crore money is held somewhere for 3 to 5 days, it's a huge loss for a company. And moreover, 2 to 3%, it's like few crores, which is a margin of their profit. So this is again going to be solved by this CBDC, where the currency is digitally transferred here with very minimum service amount. So coming back, so how this cross-border transaction happens. Now at present there are three models used. Model 1, it is very similar to SWIFT. Here there are two central banks. Let us say there is a transaction happening between India and UK, let us say. So there are two central banks for each country, and they have their own rules and they have their own infrastructure. But to transfer money alone, they use a third party, for example like Visa, MasterCard, so such things. So the two banks, they have their own infrastructure, own set of rules and guidelines. They just use a third party platform for a common platform for transaction. The model 2, this model, it was actually experimented in 2019 by Singapore and Canada. The digital currency of Singapore and Canada were linked together, and so they did not need a third party. The digital currencies were linked and they avoided the third party. And the model 3, here it is, there can be any number of digital currencies from various countries. There are many number of digital currencies, but they have one rule book. It is like the advancement of the second model. They have one rule book, and here based on this one rule book, transactions happen. Now we have to wait and see. All these three models are in use right now. You have to wait and see which is going to be the best one and chosen by the world. And now in this digital currency, in the CBDC, who is at the top? It's China. Now if China is going to crack down this CBDC, they are going to be the financial superpower of the world. Not just China, each country is running fast to crack down this CBDC network. So who or which country does this? They are going to be the financial superpower. And India has also run into this race from this budget, and we have to wait and see who's going to become the financial superpower of the world.